The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, the Monday edition, June the 4th. Unbelievable, June already. And welcome, Monday, Wednesday, Friday, 11 o'clock till noon Eastern Time. My pleasure to be here. Of course, I'm always followed Monday and Wednesday by the one and only Larry Pesavento, author of some fantastic books and a great technician. I'm just dying to hear what he says today because he's pretty much nailed that top that was in place that came in, I believe, within the time frame that he was looking at. And I love to be following. Steve Rhodes kicks us off at 9 o'clock. Fabulous show as always. Thank you, Steve. And together, Tom and Steve, 10 o'clock to 11. Just a great duo going through a lot of aspects of the market and just general economic information that is just really very important to know about. So thank you for that. Then, of course, 3 o'clock till 4, you've got Dave White. Dave comes to us with his with certain techniques that really very unusual, very proprietary, and love listening to Dave. Of course, he's our high-tech guru. And then 4 o'clock till 6 o'clock, we get wrapped up, and that's Tom O'Brien wrapping the whole thing up, wrapping up the day, looking at what happened and what will happen that he's looking at for the coming day or so. So here at 877-927-6648, we've got what's Monday, Tuesday, Wednesday, Thursday. Five days to go before I do my webinar, my all-day webinar, 9 o'clock in the morning until 5 o'clock in the evening, Eastern Time, live. I'm going to go through, in fact, I spent a lot of time, I always spend a lot of time on my either my Master Trader series or my webinars. There's some fantastic bonuses that go with this, folks. You can get such a fabulous price, right? I believe it's still going on. We might be able to squeeze it in right here to get a fabulous price. Sign up today. I can guarantee you that the chart patterns that we were looking at in all the other different webinars and masterclasses that we've had for quite a while, that I've had, I should say, we are now looking at patterns that you've got to invert because of the bearishness of the market overall in those monthly charts that I've been talking about for a while now, that I'm very concerned that if you look at the monthly charts, let me just get to it here. The Dow was the only index that went, well, Qs did it as well. The Qs and the Dow went to new recovery highs, still, in the Dow's case, still below the 2007 high, but it was a recovery high going to May at 13,338. The decline that we've had, and I'm going to include now for the very first time the home builders, the decline that we had from this potential peak eve, there's a lower high bar this month, tells me that we've got to be very careful for two reasons. One is it's the first time in my monthly chart that I've got what I call, I always raise my hand when I do. So you know that little fella that you can do when you you raise the hand up, excuse me. Well, that right arm extension is a pattern that I talk about in my CD introducing the ChapmanWave methodology, and of course in my webinar coming up, I'm going to be going through it. Now, my thoughts go directly from here back again to the webinar. I've spent a lot of time in this particular one because of the market conditions. I want to be as simple as possible. I'm going to show in the ChapmanWave what is extremely easy to do, and then I'm going to show what becomes a little bit more complex. We're going to go from the simple to the next step. There are going to be no leaps of faith. I'm going to go very systematically through each particular technique. So we'll spend maybe the first hour and a half, first 2 hours, just talking about the ChapmanWave notation and what it involves and the variations. But then we're going to go to chart patterns. Now, the chart patterns that we've been looking at, if you're looking at Tiger TV right now, look, this is what these patterns were all on the upside for the past since the 2009 March low at 64.69 in the Dow. Here's the pattern that I call the ChapmanWave stalk leg formation, where there's a very powerful move to the upside. Then it stops and makes an oval. It's always an oval formation. That's the body. So this is the leg. This is the body of the stalk. And now stalk stands on one leg. And then you get the neck, and you get the neck, and then you get the head, and then it comes down. I call that the beak. Very often when the beak is concluded, going back into the body of the arch formation, there can be another rally. That rally is very important. Does it have legs to make another two legs to the upside, or is it going to stop just one leg higher? In this case, it's stopped at one leg higher. That's the right arm extension. And that right arm extension says that if the technicals start to fail, I'm talking about a monthly chart now, you've got to be careful, because you have no choice but to look to the left side low bar as some kind of focal point, I'll call it. You don't have to get there, but that's the way you are forced now to look, especially if the monthly chart closes below the 9-period moving average, which it did the last day of May. So far this month, June, this is the second day. We haven't even had a second day. We had the first day, Friday. Now we've got the second day of the first week, full week of June. Going to be watching this really closely, because the stochastic is still at 86%. I'm going to teach you about the stochastic. I'm going to teach you what is good, just very simple. What is good? What is bad? I'm going to teach you about the MACD, the moving average convergence divergence. What is good? What is bad? What are you looking for? What does that yellow line mean? What does the red line mean? What does the red line mean in stochastic? What is the yellow? What's that silly little green line doing over there? Well, that green line is the unbalanced volume. That's how I use volume. But I have another technique where I use volume, which I'll talk about in this webinar coming up. So now what we're looking at is if the stochastic breaks under 80% in the month of June, and I'm going to explain some other things at the same time, the MACD is liable to start to, the fast-moving averages start to move sharply under the slow-moving average, and that's what we'll be looking for. That'll be a big negative. If the fast-moving doesn't, if the fast-moving has just a narrow little beta between the fast-moving average and the slow-moving average, it means something else. It means a couple of things, in fact. I'll talk about those because they are very important. So, now let's go to the numbers. The Dow is down 33. Man, I tell you, you talk about oversold, meaning nothing. One of the reasons why I took, for the first time, we took our profits, very nice gains, 42% and 14% in the core positions that we held from November, December. Just got out of them. I said, hey, you know what? I'm not prepared to hold it. One was Toll Brothers, TOL. We held it from $18.79. It went to $28.26. I really thought leg D, peak D. I just wanted to give it a little more room. I just said to myself, you know, you got a core position, but you've got to be careful because you've made the ChapmanWave stalk leg formation with a long leg up in the weekly chart. You made that body oval pattern. You had a renaming. That's a parallel wave count in the notation that made a C/G in that bar of the 30th of the week of 30th of March. Let's see if it goes to the neck, which it did to leg D. But look at this. It's down now under the 9-period exponential moving average. In the monthly chart, there's a pattern that I talk about. I never hear anyone talk about this thing. It's called the single leg A up. Toll Brothers, TOL is the symbol, in July of 2006 went from 22.22 straight up to 35.64 in February of 07, and then plunged and took out the left side low bar. I was not prepared to have that happen again. I can always get back in. I don't mind getting back in if it starts to show support. But I did not want to be involved if this is going to be a single leg A to the upside now from the 13.16 low bar. Now, this is fascinating. If the 13.55 low of 13.55 low of November of 2008, I'm looking at Toll Brothers, Home Builder, went to a peak C and then pulled back and went underneath it. It undercut it it went to 13.16. That's only 39 cents or something. Well, what happened is I cannot call this new leg a leg D. It has to become a brand new leg A because you undercut it and you have to start the buy modes from fresh. So we've done that. So this is leg A. Can it go higher? I just can't say right now. I would love to say that the technicals are strong at 90% and the MACD is still very positive. I have to wait. I'm quite prepared to get another position. Probably it will not be at the price that we got it at, I'm sure, at 1878, but it could be lower down. I might have to chase it. I don't know. I just was not prepared to give up that profit. And look at this. From the time we got out, it's 2 points lower than we got out on Friday. It went down to 24.38 this morning. So yes, it's certainly oversold and can have a bounce. But that is important. I'll explain why. HGX is the home builders. Philadelphia, the Philly home builder index. And look at this. It hit the 200 period. I'm going to be explaining. You for my webinar, you get the moving average webinar that archived free that I've done some time ago. That's a $99 value right there. But I'm going to explain how important these moving averages are. This blue one right here, or mauve color, that's the 200 period moving average at 133.59. It was a little higher. Where did the home builders index in leg D stop? At 134.46. So, and that day was, let me just double check what the moving average was. I wonder if I can do that. It doesn't matter. It was within just 20 or 30 cents in a monthly chart. Hey, that's not bad. So now it's pulling back and it's going back under the 9-period exponential moving average. Hey, you've got to be careful. All right, now let's just continue with those numbers. So, and I'll do the numbers. You've already got my message here that the weekly charts, daily charts are terrible. Monthly charts are vulnerable in all these sectors. So I'm very cautious. My mindset is not to try to go long, but to be going short, especially the weak sectors. And we took a $7 profit in one of the weak sectors, but it's not quite as weak as, say, the restaurant sector. So I'm looking at all of these things very closely to see where we can go to the short side rather than long side at this particular point, unless it's for just a really quick trade. I almost wanted to buy the TBT today just for a quick pop-up, but you know what? I don't want to risk anything like that at this particular point. The tide has changed. That's what you've got to know. So now let's go to the S&P, SPX.X. There we go. Let me just double check here. Oops, I covered up something very important here. Let me cover up. Okay. TFNN. Okay. So I'm going to run the numbers, and then we're going to go to our first caller. We've got a mic online, and just, there we go. So the S&P is down 379 at the S&P is down 186 at 1276. The comp index is down 378 at 2743. Gold is down 5. I think this is just a pop up in the gold. I don't know if I want to actually be in the long position, but if we are looking at gold a little more intensely soon, and we've got silver down 38 cents at 28.12. I hear the music. High-grade copper's up $1.50 at 3.32. Crude oil is down 21 cents at 83, folks, 83. And bonds are down 30 seconds at 152.08. I'm going to cover all that when we get back, but we're going to go straight to our first caller, Mike, as soon as I get back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, and if you're looking at my charts here at Tiger TV, you will see my show is archived on Tiger TV 11. If you look at the 10-minute chart, you'll see from the low bar, the doji low at 6.3 on the 3rd. That was last night. Yeah, must be last night at 12.62 round number. It went to a peak A, B, C, D, and then a quick E. Pull back, and then went A, B, C, D, instant restart. Those are the techniques I'm going to teach you. And then it goes A, B, C, D, pulls back, and has a quick bounce to an E, and then plunges from the high of 12,081.50. What I said to subscribers this morning, I'll show these charts in my opening call. That's my daily service every day. I said the 1281, 1282, 200 period exponential moving average is going to be strong resistance, and then we've got to watch real closely because 1269 to 1267, maybe 1265, that's going to be really important on the day. I suspect there's still going to be enough energy to try to have a bit of a rally here. So we've got a pattern that someone in the den said dreaded H. Yep, so far it's a dreaded H because if it takes that 1269.50, you've got to see how it closes that bar. 120-minute, the 10-minute bar closes. At this point, the technicals are weak, but it is trying its best to rally. And the 120-minute chart here is another technique. I'm going to spend a lot of time on this because it's going to be very important for targets on the downside coming up in the next through the summer. Is to look at the left side, right side price time match. Remember on Friday I was talking about it and I said, well, we went right through within two 120-minute bars through the 10:30 time frame on the 1st, that 2 bars later is where you should have done it, so you did it 2 bars early. And then it went down to 1262, the E-minis, rallied up to the high today of 1281.50, and now it's going to be very important that it tries its absolute best to rally. This is one tough market. If you're trying to be long, it's a tough market. I'll talk about the VIX and the TRIN and all other things in a little while. I want to go to Mike in New York. Hi, Mike. How are you?
Good, Basil. I'm short COO, and what I'm attracted to, if you put up the weekly,
yes,
is you have the Groucho Marx pattern on the Stoke, and you have the MACD on the weekly crossing over right now.
Correct.
It's a high beta situation. What do you think of this as a short, as adding to the short?
Okay, let me go through this so that folks at home can tell what we're talking about. COO, Cooper Companies. Now, this is a medical equipment supply company. If Cooper is having a problem, the medical area has just been the absolute best. They've been the stars for a long time. They've avoided almost all the travails in other sectors up until now. So the fact that the monthly chart is in a peak E, if there's no new high bar today, the fact that it is getting close to testing the 78.53 area, of course this is not even the second full day of trading in the whole month of June. This is what I'm going to tell you. I'm going to say that let's leave the monthly for the moment, because we know exactly that if the monthly closes anywhere below 70, let's call it 74 on the last day of June, that monthly is going to be very ugly. Let's go to the weekly. The weekly, the 9-period exponential moving average, that white line, once the price of Cooper Companies, COO, is trading right now at 79.71, down 316. Once it crossed and closed above the 9-period moving average the week of December the 9th, the stochastic was crossed very nicely to the upside, with the fast-moving average giving a wide differential between the slow-moving average and the fast-moving average. That's the yellow line. You've got a fabulous V-shaped bottom in the on-balance volume, the green line. Now look at this. The MACD takes us very wide after deflecting lower. The yellow line takes us wide. I always think of one of those Lamar racetracks. Wide turnaround, little what they call a hairpin bend. Takes the turn to the upside, and then finally crosses over the week of the 13th of January. Well, that white line has been support all the way. It's hard to believe, but it never once closed underneath the 9-period exponential moving average until the week of the 1st of June, last week. That said, be careful, and then what you do is you look down, and you say, hey, the MACD is doing the exact opposite of what it did before. It's making a wide beta. Well, this is the first day of the week, so I should say that it has the potential to have a wide beta. It hasn't yet because the week's not finished. We're looking at a weekly chart, but it's gone below the 9-period moving average quite decisively, and the MACD is pointed decisively down. All of those are very negative. So now we go to the daily chart. So first of all, the answer is congratulations, yes, and where would you add? I agree. Where would you add? Now this is what I would do. The bar that we're into today, I'm not sure if it's news related. If it's news related, then that's one thing. But if it's just going down because the market's weak, then the 76.70 area will be the 200-period exponential moving average. I'm going to do a little work on this chart because I think a lot of people would like to look at charts like this. Give me a moment. I'm going to look at it, and I'll come right back, and I'll give you the answer as soon as we get back. Thanks for holding, Mike.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everybody. We're back. Basil Chapman, Tiger Technicians out. Dow down 31. S&P's down 472. I had an email over the weekend. One of our TFNers who listens diligently to all of us said to me, you keep talking about the webinar. You keep it's like a commercial these days. And I said to him, how else can I'm a devotee of the ChapmanWave. I'm the advocate for the ChapmanWave. I'm the only one around here that actually uses a ChapmanWave because it's something that I've developed. It's my technique. I believe in it firmly. It's done very nicely for us. And in fact, we have got a course short that is nearly 20% up that is like the GE was on the long side. We're treating it as on the short side. These are techniques that I've developed over years. If I don't talk about it, nobody can really talk about it to the same degree because I'm the one that spent the most time on it. And I will talk about it, I said to him. You're going to have to get used to it. But so with that said, we're on with Mike from New York. And what I want you to talk about is another technique that I've got, which is the left side, right side arch formation. And also something that I'm going to be talking about at the webinar on Friday between 9 and 5, and you've got a fantastic opportunity now to get in at a darn good deal with some fabulous bonuses, is the round numbers. Now, if you look at the highs, you remember I spoke about Apple at 644 round number high. There are so many stocks that have made round number. MasterCard, I call it there are silent round numbers. You've got to look for them. They used to be very obvious years ago when folks, money managers would shout out, "Get me out at 46, get me out at 40," like the crash of 1987. Those round numbers were just unbelievable. I've got the book somewhere here. I've got them all written down. One day I'll find it, and I'll just talk about the round numbers on October the 19th. It was unbelievable. I think they are very important in certain areas. So Coup, which is Cooper Companies, made a silent round number, one that you couldn't see. Only I would see it because it was at the close of 87. The day after it made its high of 89.31. It had a round number close of 87. My philosophy is, if it starts to close decisively underneath that round number, after you've made a D or an E or an F, and your technicals are starting to fail, it's giving you a clue that round number, once you decisively close it, it will become a barrier. Well, look what happened to Coup. It closed at 87 on the 4th of May, ran to 88.15 the next day, back again to 86.14 the next day, ran to 88.44 on the 10th, on the 11th, it went to 89.24 underneath its so far high, major high of 88.15. So it goes to, is that a higher high? No, that can't be. Wait a minute. Whoa. 89.31. I thought that wasn't a high. So it fails to make a new high. It makes this double top. That's that Groucho Marx eyebrows top. And what happens is the double top turns around, and now 87, when it had the major rally back on the 24th of May, it only could get to 87.61 and close much lower, and now today it's trading at 79.76. I have a left side, right side price time match. It could happen before, but it says by the 15th of June, the low should be tested on the left side of 77.63, made on the 22nd of March. Oh, then I should put that there, and that should be going over there. I just want to double check. Give me 1 second. Okay, now your question is, where should you add to the shorts? It's going to be tough because I would wait because of today's candle. And because of the stochastic and the MACD, the way they're coming in, I'd look at the 120-minute chart, which has just hit downtrend. Here's another thing I'm going to teach. How do you use one trend line to be able to give you some comfort and we're looking at a support level? Well, in this case, the stochastic's at 6% in the 120-minute chart. The MACD is still expanding, so any bounce here should still come back and retest the low that it makes today, whatever that low is. Maybe it's the 79.31 level. I will wait, but somewhere between the candle that we made today, if there is a sharp rally in the general market just because of this oversold condition that we're seeing right now, bonds pull back, dollar pulls back, volatility index, the VIX pulls back, then you might get a bounce, and you get a bounce all the way to 82.36. It might not even get there, but if it gets to 82.36, wait for it to arch over, and as it arches over, you can put in another short, and that have a stop somewhere around 84.70, because 84.63 is the 200-period moving average. But you're in a fabulous position being short. I would definitely consider adding to it, but I'm talking risk-reward. So it's either one of those things, you just start another position on any bounce now, but you have another position which will be a little bit heavier up near the 82.70 to 83.50 area, somewhere around there. And the daily resistance is 84.07 on the 9-period moving average and 84.63 on the 200-period 120 moving average. Where's my target? Well, it'll be to the left side low bar within the coming week and a half or so, and that would be at 77.63. So I hope that helps you, Mike.
Yes, thank you very much.
Thank you very much for calling. Always appreciate it. Now, folks, this is what I want you to do. The volatility index, VIX. Remember I spoke about this? I said that my target, last week sometime, I said my target could be the 28s and later on the 35s. I didn't have time frames for them. Today's high was 27.73. The MACD is good, getting a little overbought, and the stochastic's at 81%. It's lower than it was when it was at peak C in the stochastic, And in fact, but not in the MACD. So that says to me we've still got to be very careful. And my contention is that as long as the VIX, the volatility index, holds in the mid-20s, selling pressure is going to be there. And in fact, any rally at this particular point, I would say that the 22 area is probably going to be the support, and then we'll start another rally. Now, this is the very important key that I'm looking at. We've only just started the week, so I can't talk about the weekly chart as if the volatility index, the VIX index, has actually concluded its move. For the week, it's got 5 days, full sessions to go. But the stochastic so far is at 87%. And the 9-period exponential moving average support, which I spoke about 3 weeks ago as it's walking it was actually 4 weeks ago that it was starting to walk the 9 EMA, it made me a little bit cautious, says that the 2242 area to the 2125 is major support, with the 200-period moving average at 2365. So you've got a cluster pattern here that says right around between 23.5 to 21.25, you've got tremendous support for the volatility index. The monthly chart, and this to me is really important, the monthly chart says we've broken out. We've used the trampoline base that was forming in between 19 and 13, actually it even goes down to 9.39, but I've been talking about it as just 19 to the 14 or 13 area. That became a base to climb above the 9-period exponential moving average, and that's saying to me this is a time to be very careful. I don't have any signs yet of weakness in the volatility index. The next bounce could be by the end of the day, will give me a sense of what's going on in terms of the volatility index. Now, I've also spoke about this on Friday. I said the short-term trading index was pathetic. It was like in another room. It didn't even know that the market was turning down sharply. That to me is very, very important, because it says that there's still room there could be a bounce, and the short-term trading index could come down a little bit. But what we're looking at is that it only went to 1.90 on Friday. That's like ignoring, it's like ignoring the storm coming. So this says to me, watch out, because I have a volatility index target up in the 4s at some point in the month of June. And that's going to be very important. Now, the other thing is on the shorter term, we've got the VIX index could be making a peak E as we speak right now at 27.73, doesn't get to 28, and we have some kind of a rally. Let me just quickly go now to bonds. I don't have to be quick about anything. I'm going straight to bonds. Bonds in leg F/B. Now, wait a minute. Oh, man. F says you've got to be careful. You've got to be really careful. B says, whoa, this is really positive. Well, in the ChapmanWave, there are certain techniques that I use. And this is what we're going to be going through on Friday. When can I look at a stock? When can I look at a particular buy mode that's gone to a peak D, pulls back for just 1 or 2 bars, and by the third bar it's broken to a new high? What does it mean? Well, it means that if the technicals and the stochastic are still very strong, and the price is way above the 9-period exponential moving average, this could be a brand new buy mode, and we won't know. So there's really nothing to do in this particular issue. If you're long, you stay long because you haven't got the sell signal yet. And it says, be careful, because if by tomorrow, well, today, if it breaks above 130.38 on the TLT, this is the Lehman 10-year iShare T-bond fund, that'll say it's extended up in leg F/B. If it happens tomorrow that we don't make a new high, but tomorrow we go to 130.39, I have to consider that that's a leg C and not a G. It's going to be a C, and it says you've got another couple of days of going higher. Be careful in the market. That's the most important thing. The other is that the weekly chart, because it hasn't made a new high, but if it makes a new high this week, this extends leg C. That is really important because it's breaking out. The other thing is, if it doesn't make a leg C, it's made a peak C, you've still got D to go in the ChapmanWave. But look at the MACD and stochastic. The MACD is expanding still, with the histogram getting bigger. That's those vertical lines. And the stochastic's at 96%. These are the techniques I'm going to teach you. I use a lot of words here because it's, I'm trying to explain visually, because there are people that are listening but not looking. But when we're doing it live, I just have to point and you say, oh, yeah, there it is. And then you'll see 96%. And I'll be able to explain, but just by pointing. The MACD is expanded. It's crossed positively. The monthly chart is broken out. I have to tell you, it's hard to believe, but bonds still have not given me anything of a sell signal. I mean, I can't believe this. I talked about the Japanization of our bond yields, but when you see it actually happening, you say, how can this be happening? People have to be going into bonds only just as like a safety haven because they think like it's instead of a mutual fund, they're going to bonds or something like that. Because these are at par. These go back to 100 at some point. So 151 and 22/30 seconds. Monthly chart has made a new high. That's now leg C/E. MACD and stochastic are still good. This is the continuous contract. And it's a 21-year up channel, but it actually started back in 1981. So this is an incredible thing. So let's go through this very carefully. Bonds are saying you've got to be really careful right here. This is Larry would call it an outlier event. It's been an outlier event for a long time, but this is the outlier of all outliers. And I thought this morning, I said to subscribers, yeah, you could get the TBT at the opening today, which was around about 1490 or 1480. I said, but I'm only looking for a percentage gain. I don't think I even want to play it. I just don't want to play it. This is just too dangerous a market. All the signals that say that we should have rallied to the upside have failed so far. And the rally that we did have in the market, if you look at the let's go to the S&P right now. If you look at the S&P, the rally this is the dreaded H. Remember earlier in the show I was talking about the pattern that looks like a lowercase h. We're going to spend a lot of time on that because you're going to see that in many charts right through the summer. It goes straight down. In this case, I'm looking at the S&P, which went from 1415.32 on the 1st of May, straight down to the low of, on the 18th of May, to 1291.98. It goes to peak A, peak B, and then it pulls back, and it crushes, goes right through that support at 1291 on Friday, goes all the way down to the low of 1277, and today's low is 1270.83. That defeats everything about the ChapmanWave methodology. In my CD introducing the ChapmanWave methodology, I showed that these scallops to the downside can occur consecutively. They can just keep going down. So I'm very cautious right here. I've got a left side, right side price time match in the S&P somewhere by about the week of the 13th of July to retest at least the low of the 23rd of June at 1202. If you look at the Dow, that comes out to which month did I say? Also same thing. Oh, it has to be almost the same. Yeah, this is the same. This is the 20th, the week of the 20th. So in that time frame, and that should test 11,231. So it says that any rally from here, this diagonal line, which I call the ChapmanWave inside wedge, that's your new support line. And today, the support line is at 11,870. The next day, it is at 11,796. So we'll just watch. Is it going to come back? The resistance is this 9-period exponential moving average at 12,535. Now, I had a question about, let's see, AMRN. We spoke about it the other day. I said you've got to be careful about peak D. This is Amarin something or other. What is it called? Amarin Core PLC. It's trading at 10.48. Down 31 cents. This is a pattern that we've been looking at in a number of charts where you make the arch formation, the cup formation, you make slightly higher highs and higher lows. When you get your peak D, in this case, the peak D was at 1280 on the 29th of May. Got to be careful. And the stochastic, as I said, I think on the show, the MACD and the stochastic were not confirming. Got to be careful. So there's a question about a buyout. 985. Okay. I'll talk about this. If there's a story coming up with it, I'll say where I would be looking at it if you want to take just a little nibble. I'll be right back. Basil Chapman, Dow's down 35, S&P's down 5.
You've heard Basil Chapman on the air hosting the Tiger Technicians Hour and always wondered what's behind his powerful Chapman Wave. Well, Basil has just announced a one-day online master trader course where he'll explain his ChapmanWave methodology in detail so that you can learn how to chart Basil's one-of-a-kind formation techniques in real time while the market is open. Not only do you get a full-day online master trader course with Basil during live market hours, but by signing up now, you also get a free month of his newsletter, The Opening Call, a $128 value, along with access to his Moving Averages webinar, another $99 value. This online course takes place Friday, June 8th, and will be archived so you can view it as many times as you like for 30 days following the course. Make sure you take advantage of this one-of-a-kind Master Trader course with Basil Chapman during live market hours by visiting the front page of TFNN.com and reserving your spot today. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman, and I just wanted to do something here. 8.30. Okay. I had a question about a particular stock, AMRN, Amarin Core. I think biotech or something like that, maybe. But it was once trading at $14.25. That's not $14.25. It's $1,425.00. It's come down a little bit. It's come down to, let's see, a low of, I can't even get the chart correctly here because it gets so squashed. But let's say somewhere around the 60 cent area, 50, 60 cent area back in 2009, and it's trading now at $10.47. Now, I don't know if there's anything coming on, if there's any news that's going to come out, But if there is news that could attract you, the question was, where would I be looking at to put small positions? I would say if you think there's news coming out fairly soon, I should check if it's a biotech. I can't right now, but if it is a biotech, this is where you only want to trade the news, because technically it's made a double top and it's pulling back. It's now underneath the 9-period moving average. I have a $9.76 is the 200-period exponential moving average. $9.18 is a simple moving average, but the 200-period moving average on the weekly is 824. I suspect that if it has a little bit of a bounce in the next 2 days, that bounce has to come above, it's at 1048, it has to come above 1020. If it cannot, it's going to make this pattern I call the Eiffel Tower go straight up and straight down. We saw that in, what was I talking about earlier on? Oh, the potential for Toll Brothers, just the potential. I'm not saying it's going to do that. I've just got to be worried that that single leg A up can pull back like it had before. Well, it's the same thing here, because if it breaks $10, it looks like it'll test the 980 low. Well, 980 low corresponds to the $9.76 200-period exponential moving average. So I'd probably do a little nibbling there. I'm saying nibbling. I'm just saying, if it's going to have a spectacular move, rather in a market like this than to lose quite a bit because you're wrong, gain a bit because you're right. You don't have to be. It doesn't have to be a spectacular move to the upside. The weekly so far is holding quite well, just technically. More importantly, I would look towards the $8.30 to $8.20 as absolutely critical. If it hasn't had this big run before then, if it gets there, I don't know if I even want to take a chance, because it could fail and really go down to the $7 level again. So I hope that helps you. But technically right now, I wouldn't be touching it other than if there's a news-related situation. So here we go. I'm anticipating somewhere, sometime, even could be today, based on my volatility index and the TLT, etc., that there's at least another rally attempt. There was one earlier, it's failed. I actually kind of like that situation because it's making people more and more nervous. That's why these things can come out of the blue and you can suddenly have a rally. But I'm treating the rally as potentially looking at stocks in the auto spare parts sector, the restaurants, etc. Those are areas that I'm looking to go short. I'd love a bounce. We took a profit today in one of our stocks that we got into from the auto sector, but I think I was just being too clever by half. We were in at a great price at the opening on Friday. I should have just kept that and said, you know what, bear market, you show me that you can take me out. That's the way you've got to think in this game. But it's okay. A profit is a profit, and it's hanging out near where we got ours. That's the way I'm trying to do it. Now, if you're going to be too clever by half, you can land up taking away any profits that you make on the short side. So my suspicion is that you've got to have two levels. You've got to, if there's a bounce coming, there's a little bit that you can start. And then if the bounce gets even stronger because bonds suddenly pull back sharper than you would normally expect at this particular point, then you've got to have another level on the upside. So don't be surprised if it could turn out to be a very strong move to the upside in the very short term. It could be stronger than we are thinking. I just don't know yet. I'll know by the end of the day. Meanwhile, we're looking more to the short side than anything else. Thanks for being here. Larry Pesavento is going to be on straight after me. And don't forget, Friday is my webinar. Sign up. I think you're going to get a lot out of it.
Are you looking for precision